All right, we got that CPI report this morning, and I think the market liked it. Based on what we saw from the market reaction, the market liked it, and we didn't just like gap up to the upside on that news. We continued to go up all day long. It was a really, really good bullish day today. There was a lot of good patterns developing in terms of the potential continuation of a new leg higher, not a new intermediate run, because we're already on a very mature one. I'll show you what I mean when I say that in today's video. But starting a new leg higher, that's perfectly feasible with what we're getting. And we might finally break the pattern of up, down, up, down, up, down tomorrow with how bullish we were today. So I'm going to break all that down in today's video. What's really moving? There was like a couple surprising moves in different intermarket relationships with the S&P 500. I'm going to break those down. The sector rotation has been top notch. I'm going to show you what I mean by that. Really since that August 1st low point, but even today it was a really good sector rotation. We'll take a look at that. And then of course our trade ideas in one of the good sectors that we want to outperform. It's in one of those sectors, and it hasn't been doing too hot lately. It's well below its 52-week highs, but it might be starting to do its own type of catch-up trade with the kind of breakout pattern it had today. So let's go ahead and get started. Today is Tuesday, August the 12th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. Let's go ahead and start off taking a look at the S&P 500 with the market forecast indicators. You can see the intermediate line is rising again. It's up to 84th percentile and easily in the upper reversal zone now. And the market sentiment line we're almost above market sentiment. It's falling, but still it's in the reversal zone. And remember, any cross, bullish or bearish, is good, no matter where that cross is. That's different than the near-term crosses through the intermediate line. Those are less significant up here, and they're more significant down, between the reversal zones. So obviously we haven't had that because we haven't had the intermediate line between the reversal zones for very long. Just right here, we didn't have a cross. We're still below it, but the near-term line at least is, at the 82nd percentile, so it has climbed into the upper reversal zone. That's a very good sign. We talked about that oversold momentum line yesterday. We talked about the possibility of us bouncing today, and that happened, right? That's the case now. Again, the last few times we've rolled back down. We have a new high. We have a new closing high, so that might be a little different this go around. That usually brings in some money when you get new all-time highs. So I wouldn't be surprised if we broke this trend and had some, had a little bit of, at least a little bit of follow through. The near term, we've been on this near term run for a while now, coming off of this low point from, August the 1st. So it's been a good month of August so far, after a really bad first day of the month. The momentum line is up, but it's not oversold, so it doesn't mean necessarily we have to go down. I mean, the last few momentum peaks above 50 have all dropped immediately. So, but that's not always the case when you're bullish. Generally, you can make a run up to the upper reversal zone at the very least. So we'll see if that ends up being the case. We are more than 2% above the moving average, so that's not nearly extreme. In fact, getting to 2.5 is kind of the ideal, right? That's the sweet spot between 2.5 and 5%. So we're kind of working our way back up in that direction, coming off of, again, that August 1st quasi bull tag, right? Where at least we didn't get the light green shading in the yellow line, but at least we got the yellow line. And we have since bounced off of that, just like we have pretty much every other bull tag so far that we've had. Again, bull tags, remember, they're inflection points. So they can either start really good new leg higher, like you saw these two, or they can start intermediate declines. Now remember, this is a correction. This was the first, the first leg of that correction, which was the pullback. It got down to lower lows. It was a 10% decline. So we had a good idea then that we were going to go in the correction, and we did. All right. So that's kind of the idea there. So it's a good pattern, really good pattern on the chart for the S&P. The NASDAQ, of course, not surprisingly, looks better because we're so concentrated right now in the Mag 7 names. Up 1.33%. So that's good. The intermediate line's back above the 90th percentile, having crossed above market sentiment. Near-term line had gotten into the reversal zone. It's still barely in the reversal zone there, and your momentum line again bouncing off of oversold levels. So just like we expected, very good, right? The Dow Jones Industrial Average, its near-term line has crossed above market sentiment. So we crossed. So here we go. We're crossing 40 and 50 and almost 60. So we crossed multiple lines, not quite all three, but you do have a strong momentum line coming off that oversold level, bull tag. So we have an opportunity here to kind of break through. We had multiple bull tags. We haven't been able to really get going, but we are back above the moving average. It's green, so we're above a rising moving average. Barely, but we're above the moving average by 0.15%. And there's a good chance, right? There's a good chance that we can bounce off of here and avoid an intermediate decline where the intermediate line drops into bearish territory and just drops down. In this case, it's a smidgen below bullish territory. Finally, let's take a look at the Russell 2000, and you can see a really good bounce on Russell. So 3% gain. We haven't had, when was the last time we had a 3% gain on IWM? Let's check that out here. It was at 2.97. I had to go back to May the 12th was the last time that we had such a good, strong move on the Russell. So let's see here. Let's go back to the Russell. And May the 12th would be right there. So that was the last time we've been this bullish, and we had just kind of started. So, again, bull tags, that's a clear bounce off a bull tag. Near-term line crossing 40, 50, and 60 with the momentum line. I mean, this is the short-term pattern we really like. And crossing above the intermediate line as well. Remember that there's a lot of catch-up for the Russell to do because it's been lagging for so long. So here's a really good start to potentially that catch-up trade. Now, granted, when the Russell 2000 starts to outperform, we'll look at this here in a minute, but when the Russell 2000 starts to outperform over an extended period of time and is correlated with the markets in general, so if the Russell's outperforming with the markets going up, that usually precedes the end of an intermediate decline, since we've already been on this intermediate run for so long. So, if that starts that kind of a leg right now, we need to be aware of that. Now, that can go like a month or 2 months, so it can go a while. So it's not like this is imminent declines here, but it is something to be aware of. If the Russell starts to outperform the S&P with the S&P going up, then we need to be aware that again, especially considering we're on a very mature intermediate trend as it is, that generally marks the end of one. And again, not in a day, not in a week, right? It might be weeks or maybe a month or two before that finally breaks down. All right, well, that's our market outlook preview. The rest of the video is available for all of our subscribers to Market Scholars, starting with our foundation tier. It's at $29 a month or $299 for the year. You get 2 months for free, and that gets you access to all of our full versions of the Market Outlook videos. You can see the description. The link to today's video is down in the description below, as well as a link to sign up for that foundation tier. Again, it's a great value considering you get access to all of our Market Outlook videos, all of the trade ideas. There's one trade idea every video, and you also get access to the Market Outlook Live, where we manage those trades, talk about whether we should stay in or get out of them and why. And then you get access to our Market Outlook Trade Tracker, where we track all the results of all the trades throughout the year. So all that's available to you, again, for just $29 a month or $22.99 a year with 2 months for free. Again, both links down in the description below or in the pinned comment as well. Again, thank you very much for watching. Remember, subscribe to our YouTube channel so you get notified when these videos are posted. Like today's video, share it with anybody else you feel like would be interested in it. Follow me on Twitter, Facebook, LinkedIn, all the different social media channels. Like our Market Outlook posts there so we can promote the video and get it out to as many people as possible. Again, thank you. Have a great rest of your Tuesday night, everybody, and we'll see you all tomorrow.